that have really come alive over the last 43 days. That's since October 27th. $1 trillion in market cap, and that was the biggest gainer this year.
In 2023, the market capitalization of all U.S. corporations valued at more than $1 trillion hit $10 trillion, a doubling from the year before. The top five are Apple, Microsoft, Alphabet, Amazon, and Nvidia, with a combined market capitalization of nearly $3 trillion. Each of the five businesses is in the technology sector, and many of them provide daily use goods and services to customers. What is the market capitalization of these companies? The total market value of a company's outstanding shares is its market capitalization. A company's market cap can be computed by multiplying its stock price by the number of outstanding shares. A $10 stock, for instance, with 1 billion outstanding shares, would have a $10 billion market capitalization. Number 1 is Apple. Apple is one of the most well-known brands in the world and produces and manufactures a wide range of consumer electronics products. During its fiscal year 2022, Apple sold more than $200 billion worth of iPhones, bringing total sales close to $400 billion. One of the biggest investors in the corporation is Warren Buffett's Berkshire Hathaway, and Buffett has frequently complimented the tech giant's operations. $2.7 trillion is the market capitalization. $172 is the stock price. Number 2 is Microsoft. The software suite that Microsoft offers, which includes Microsoft Office, is what makes it most famous. In fiscal year 2023, the company's sales came close to $212 billion. In October 2023, Microsoft plans to complete its $69 billion acquisition of Activision Blizzard. $2.3 trillion is the market capitalization. $317 is the stock price. Number 3 is Alphabet. The majority of Alphabet, the parent company of the massive search engine Google, its over $283 billion in revenue, comes from online advertising. In addition, Google owns YouTube, operates a cloud computing company, and has numerous other endeavors that it refers to as other bets. $1.7 trillion is the market capitalization. $133 is the stock price. Number 4 is Amazon. In addition to becoming the biggest online retailer in the world, Amazon has grown a substantial cloud computing company called Amazon Web Services. In 2022, Amazon's total sales were estimated to be $514 billion, which included over $80 billion from AWS. As of September 2023, Jeff Bezos, a co-founder of Amazon, ranked third in the world's wealthiest list per Bloomberg. $1.3 trillion is the market capitalization. $128 is the stock price. Number 5 is Nvidia. In June 2023, Nvidia, NVDA, a semiconductor corporation, became the most recent business to reach the $1 trillion milestone. This was due to investors grabbing up the company's shares, anticipating a surge in artificial intelligence. As of September 2023, Nvidia's shares have increased by almost 195%. The company designs cutting-edge semiconductors that are utilized in AI systems. The company's fiscal year 2023 revenue was approximately $27 billion. $1.1 trillion is the market capitalization. $437 is the stock price. Tesla, the manufacturer of electric vehicles, and Meta Platforms, the dominant social networking company, have both surpassed the $1 trillion barrier, but their share prices have since fallen below it. What are the enabling factors of a $1 trillion company? Number 1 is Frontier Technologies. In their own nations, the $1 trillion corporations have developed into centers of innovation. They actively search the European, US, and global markets for intellectual property to add to their collection, and they have sizable R&D labs. These two titans frequently purchase rapidly expanding tech startups in Europe, even if the acquired technology is never put to use. Anticipating the demands of the two tech giants is becoming a bigger emphasis of tech R&D in institutions across the US. Number 2 is availability of capital. Though unevenly distributed, the amount of capital is at historical highs. With virtually limitless funds at their disposal, the two digital giants can finance their own research, make investments to upend adjacent industries, and follow an aggressive M&A strategy that sees them making an average of one acquisition every week. Money has entered the market to find and invest in businesses that the two internet behemoths could want to buy in the future. Number 3 is economic development. In their home nations, the trillion-dollar corporations have significantly boosted economic activity. Their employees pay the greatest income tax per person for a corporation of their size. They dominate national stock markets, and they are significant donors to charities and the arts. The majority of political leaders applaud the internet giants in public, but in private they feel diminished by their increasing influence and power, especially when it comes to subsidies. How did NVIDIA become the latest entrant to the trillion-dollar club? NVIDIA's chips are now used in self-driving cars, enterprise AI models, and the industrial metaverse, in addition to their original use in video games. The company is currently trying to take advantage of cloud-based generative AI. The shift in NVIDIA's role from video game accelerator to industrial metaverse and artificial intelligence AI facilitator took some time, but the company's stock market worth increased to over $1 trillion. It was at this point that NVIDIA's stock market valuation shot through the roof, propelling it into the exclusive trillion-dollar club alongside well-known tech giants Alphabet, Amazon, Apple, and Microsoft. The company had reported strong results for the 3 months ending April 30th, 2023, and had projected that its sales could jump by 50% in the following fiscal quarter. The once niche chip company was becoming a Wall Street favorite, well known across the country. Later that week, however, investor enthusiasm subsided, and the chip manufacturer was quickly kicked out of the trillion-dollar club, following in the footsteps of previous members Tesla and Meta. However, it quickly returned, and in mid-June, investment bank Morgan Stanley predicted that NVIDIA's valuation may increase by an additional 15% before the year ends. By the end of August, NVIDIA had more than lived up to its earlier optimism, having reported an 88% quarter-over-quarter increase in revenue for the 3 months ending on July 30th. This growth was fueled by record sales of data center products, which totaled over $10 billion, with strong demand coming from Oracle, Microsoft, Google, AWS, and Meta. Its stock price also kept rising, approaching the $500 mark predicted by Morgan Stanley. NVIDIA has less consumer brand awareness to go on than most of its trillion-dollar tech peers, which makes its Wall Street debut more enigmatic to Main Street. How NVIDIA got here and where it's heading next provides insight into how the business was able to attain that valuation. This narrative is mostly due to the growing significance of specialty chips in the corporate world and the growing interest in the potential of generative artificial intelligence. In 1993, NVIDIA was a fabless semiconductor company that created graphics accelerator chips for personal computers. Its creators saw that the production of 3D visuals for video games, a rapidly expanding business at the time, put a heavy mathematical and repetitive burden on PC central processing units, CPUs. The initial NVIDIA GeForce graphics cards were made possible by their realization that those calculations could be completed more quickly in parallel by a separate chip than in series by the CPU. For many years, NVIDIA's business was centered around graphics. Even now, after 30 years, it is still the largest supplier of discrete graphics cards worldwide because of sales of gaming graphics cards, such as the GeForce series. Other applications for NVIDIA's GPU's parallel processing power have developed over time, resolving issues with matrix arithmetic structures resembling those of 3D graphics modeling. Nevertheless, in order to use graphics chips for non-graphical applications, software writers had to organize their calculations so that the GPU could receive them as a set of instructions for the open-source OpenGL, Open Graphics Library, or Microsoft's DirectX Graphics API. For trillion-dollar corporations, is the metaverse, AI, and cryptocurrency mining the way forward? The necessity to execute billions of repetitive calculations in order to train machine learning, ML models, has been one of the main factors driving demand for NVIDIA's chips in recent years. OpenAI's GPT-4 model is claimed to have around 1 trillion parameters, making it one of those incredibly large models. In order to speed up the training of the large language models, LLMs, that OpenAI was creating, NVIDIA even created a unique compute module based on its H100 processors. Cryptocurrency mining has proven to be an unanticipated source of demand for the company's chips, as GPUs are capable of handling calculations more quickly and energy efficiently than CPUs. Because of the years-long shortage of graphics cards caused by the demand for GPUs for cryptocurrency mining, GPU manufacturers such as NVIDIA can be compared to pickaxe dealers during the California gold rush. Even though 3D gaming was the primary application for NVIDIA's initial chips, the manufacturing sector has a deeper budget and is equally interested in 3D simulations. NVIDIA has created a software platform called Omniverse, a metaverse for industry used to construct and view digital twins of items or even entire manufacturing lines in real time. This goes beyond the fundamental rendering and acceleration code libraries of OpenGL and OpenCL. The final images might be utilized for marketing purposes or to work together on new ideas and production techniques. Are you an investor in any of these companies? What is your take on the overall market capitalization of these companies? Do share your thoughts on this in the comments section. For more interesting stories and updates, subscribe to our channel and do not forget to press the bell icon for notifications. Goodbye.